today's video I'm going to take you through step by step how I found this gold trade that I sent in the free channel. As always, make sure you leave a like on the video because it helps me to understand if you like the video or not. And if you're new to the channel, make sure you subscribe. And let's get started. So I sent this on my Telegram page. I said gold 1 hour potential sell. It was a free setup. Everyone's favorite pair. I favor that gold has the intention to move down, and then I gave my analysis, and I said make sure you look for sell opportunities upon confirmation from your trading plan. Okay, the gold was around here when I sent this setup. What we can see that here was structure that was holding for a while. Okay, this is a BOS, break of structure. Okay, so here was holding since this level, so we broke this level, then came back to the retest of that area, and it's been holding since late October. This move here broke it, and what do we have here? Well, here we have a order block on the 1 hour time frame. The market always repeats itself. This is something you guys have to bear in mind. If you look here, we had some structure here, right? Price broke through it, went up, a bit of manipulation, and then it went down. So we're kind of expecting the same thing also from a structure based point, where we can see that price has made a lower low, a lower high, a lower low, a lower high, and then it has potential to go down. So this is essentially in a channel like that, and it's very bearish. This is a classic bearish structure. So I told the guys in the free channel that potentially we'll be looking for sells here. You broke structure, the move happened from here. I've made this little fib tool, so if you add it here, so from one swing point to another swing point, anything above this 50% is a good sell. Anything below it, it's basically a buy. What we can see, let's remove this. Price broke structure, leaving all of this imbalance. So clearly price slowly needs to go back to fix this imbalance. And here was the 1 hour. We did nothing here. What you can do, there's two ways you can trade this. Either you put your entry here at the wick of the OB candle, you put a stop loss above it, and then you would point, for instance, let's say here, I told the guys that we should mark this level. This is the swing point, so we wanted to kind of like aim here. This is one of the ways you can do it. It is not as safe as you think, because what happens, price can just go up. For instance, here is an example. We broke structure like this. This is the OB. Your entry would have been here, stop loss here. You see how price manipulated, go up, then go down. But you need to know why price did this. Well, here we have equal highs, right? Price created these equal highs, went down a bit, making people think it's gonna go down. Then it went up, took the equal highs, the equal highs, which is basically a liquidity zone, and then it pushed down. So hence why I said this can work, but it's a bit aggressive. Okay, so let's remove this. Now what you can do is you can go on a smaller time frame, such as the 1 minute, 2 minute, 5 minute, 15 minute, 30 minute. It really depends on the structure. Whichever time frame is giving you a clear a clear look at the market structure. Sometimes it's the 1 minute, sometimes it's the 2 minutes, sometimes the 15 minutes. There's no fixed time frame. In this specific case, the best time frame that gave me the indication where I can enter was the 5 minutes. So let's remove this. At this point, what you can do is literally just watch market. Okay, let's keep moving price. So what we can see, we broke structure here, same thing as the bigger time frame, and the move happened from here, right? So one thing you need to know about smart money is you need to move your stop loss to break even as fast as you can. We'll put our stop loss just above the structure, and then we'll aim whatever. Oops. wrong way, and we aim like towards the bottom. So let's see what price does. Price came very close to that area, but it didn't hit it, right? So this basically filled all of this imbalance. This level is no longer valid because, you know, price, it came very close to it. Look how close it came to it, right? All of this imbalance has been fixed. It didn't go as high as this because this wick here essentially took the deficiency. So you see how it came to that area, okay? So here you would not enter. You would have entered, but price never got to your area, so you don't enter. Now what we do, you just let price do its thing. Essentially what we're looking for is for a very simple move. So something like this, break structure here, and there's an OB here, and this, all of this is imbalance. So price goes back, go to retest that structure, tap to the OB, and then go down. That's what we're looking for. If you don't see it, you don't trade it. And this little blue thing here is a higher time frame zone, which is the order block, okay? Nothing, you do nothing here, nothing. Now price is going higher, okay, into that level, which is very normal, and as you guys can see, price is ranging within our order block level. This is very normal, and this is a good thing. It's showing that price hasn't made its mind where it's going, and it's probably building up liquidity, or as they call it, distribution, to go further down. Okay, nothing. We do nothing here. Alright, here it's very important because we had a very nice counter trend, which was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then this move here happened from here, okay, and that broke all of that structure, okay. So what we do here, now we put our area where we're gonna enter like this. If the candle is very tiny like this, you can aim to go for something like that, okay. You can go for that, but this is playing it more safer. So at this point, you would enter a short position for sell limit here. Put your thing, you know, just over the structure, and then we're gonna aim the target that we had here. Let me just show you guys this area here. So almost 10R, right? Why is this a good area, you might ask? So 1 hour is showing us that price wants to go down. Now we had a break of structure, right? There, we tapped in, right? And then obviously once price moves a bit down, like somewhere here, move your stop loss to break even, and then you just let price do its thing. Bam. So this was a beautiful 10R, or if you want to call it, it was over 220 pips. The actual swing point was over 360 pips, 350 pips, just over 350 pips. And this is how you trade smart money, okay? Again, what we have here is another level, order block. Why? Structure was broken, right? And we have all of this imbalance. But you need to wait for a smaller time frame to see what happens. You can't just randomly add a sell limit here, put your stop loss something like this, and then something like that. This you can do, but this is a very aggressive style. It's better to wait for a smaller time frame. Why I wouldn't do this? Because of this. Look, see, price did not want to respect this level, so you got taken out. It's always better to look here. In this area we never got a break of structure, so you would have never entered. And anyway guys, this is very simple smart money trading. You're using imbalance to your advantage, break of structure, and order blocks. It's always a good idea to also look for liquidity zones. And yeah, this is gold.